Let's get in Nischal Maheshwari, EVP Research, Edelweiss Securities, joins us right now on the show. Nischal, really good having you. Thanks so much for joining in. Nischal, I want to ask you if you guys are coming out with any research report. Somehow the market seems to be in such a great mood that I've seen brokerages come out with reports on stocks wherein they have given target prices higher, and the stocks have continued to be in a frenzy. It's happened with 2 or 3 names. I believe this is the time to do some research spotting. What is it that you're liking in the markets currently? What have you liked in the results that have come out so far?
So I think results have been better than expected. I think most of the companies who have declared their results, I think they have been good. IT was okay. I would have expected slightly stronger numbers, but I think IT was okay. Banks have been good, and thereafter I think the pharma results have been pretty interesting. So I think till now, though very few results have come, but I think it's been a good set of numbers.
Specifically a couple of themes, Nischal. I mean, while it's not a result-based theme, but some of the market seems to have taken some fascination to PSUs. Call it more autonomy given post the elections, or just the fact that the FI holding is not that large, or a space which will turn around. But clearly these stocks are in a frenzy. Have you looked at this space actively? Are you recommending it to your clients? And amongst the large sphere, what is it that your preference lies? Where is it that your preference lies?
So I think if you look at PSUs, I think as a group of stocks, they have underperformed dramatically in the last 3-4 years. And partially it is to do with the general economy, partially because of they being government owned. So I think it was just a negative overhang on that. But if you really look at it, I think the stocks which have performed in the last 1 or 2 months, last quarter, I think it's largely been the oil pack, the oil marketing companies, where it became clear that the increase in the diesel prices will continue, whichever government comes. So I think that has been a positive part, basically, as far as the oil marketing company is concerned. PSUs have PSU banks, although it doesn't move with the regular PSU pack, but PSU banks have also done well, because in expectation or hope of a revival after the elections are over. Some of the other stocks which have done well and I like in the market is NTPC and NMDC. I think these are 2 really undervalued stocks in the market, and both of them have great value. So NTPC is around, I think, 4.5 to 5% dividend yield, also similarly NMDC. So I think these are the packs which has been moving up, but I think there is good value in both these stocks at the moment.
What about NBCC? The kind of move that the stock has seen today on the back of that big order win? Nischal?
See, I think we don't track NBCC, so I don't track NBC, so I wouldn't be able to comment really how it is impacting the profitability of the stock and whether this 20% move justifies that. So I think I will not be able to take a call on that, actually.
Well, earnings there, 872 crores quarter 4 PAT. We were looking at a figure of 840 crores coming in there. So on the profitability side, they have done better than what the street was expecting. You would largely say that the number has been in line to a bit better than what the market was expecting. 872 crores, which would be close to a 9-10% increase in profits versus our expectations of a 7.5% increase in profits. The sales figure will also come up here on your screens. But just on the bottom line, the numbers are in line to a bit better than expectations. Yeah. Sales we were expecting about 9.5% at 6,980 crores. Let's see what they've delivered there. But I think the key to watch out for is really volume growth this time around, Neeraj, 3 to 4%. That's 6935 coming in on sales, which is in line with estimates, largely in line with estimates. So that's a 10% profit growth, 10% top line growth, and underlying volume growth has come in at 3%, which is again the lower end of the range that analysts were forecasting. Analysts was looking at a range of about 3 to 4% on volume growth. That's what they've delivered. Stack that against what they've done in the previous quarter. So on a quarter-on-quarter basis, there has been a slight slippage in volume growth. Last quarter, the volume growth was at 4%. This time it's coming at 3%. But you compare it to the same quarter last year, the growth has come off by half. So last year, the volume growth in the same quarter was 6%. And this time around, in the last quarter of FY14, it's come to 3%.
I'm not surprised the stock is moving up. Just keep an eye out for ad expenses. They were believed to be high and would have curtailed bottom line growth. Maybe that hasn't happened, and maybe that is why the PAT is marginally above estimates. But let's get an initial reaction. Nischal is with us. Nischal, I'm glad you're here. HUL numbers and above estimated, better than expected PAT growth, volume the growth at 3%, which is the lowest end of the range or the lower end of the range that we were working with. What's your initial take on these numbers?
I think on the volume side I'm disappointed actually, and profitability, yes, it is higher, but that could be because of curtailment of profits. So we need to see the numbers, actually the detailed numbers. So I don't see an exciting results out here actually. Volume is pretty disappointing in this quarter.
Yeah, that's the point. So, I'll of course give you some other estimates as well as they come out. Personal product revenues, etc., are down. Underlying volume growth is at 3%. But that's my point, rather, Nischal, that 3% volume growth, which I believe is the lowest that they've done in the last few quarters, because Q4 was 6%, Q3 right now a quarter ago was 4%. Is this terribly disappointing? A 3% volume growth?
Yeah, we were expecting close to around 4.5% kind of a volume growth coming in. So at least sustaining last quarter's number. I think the profitability is largely what we've seen in case of other FMCG companies also, largely because of cut in the advertisement expenses, and that's where you get these profitability coming through basically. But we need to see the details about that. But I think volume is very disappointing.
On the margin front also, it's been largely flat, so 15% as we were expecting it, largely in line with expectations on all counts. Sanjay Manyal, who's research analyst ICICI Securities, joins in with a quick perspective on these numbers. Sanjay, you just heard Nischal talk about all the other numbers being in line, but the volume growth disappointment continues.
Certainly, volume growth is disappointing, but I think this trend, as we have seen in last almost now 6-7 quarters, where the volume growth is coming lower and lower from earlier 9% to 7% to 5% to now 3%. So, what I believe certainly it is disappointing, but I think top line and the bottom numbers are very much in line. We need to see what is the segment growth has been, because in last 2-3 years, soaps and detergent segment has given a robust growth other than last 1 quarter probably. So we need to see what kind of growth has been there in the soaps and detergent and probably personal care also.
The one-time exceptional item of about 66 crores versus 9 crores on the bottom line. Adjusted for that, how impressive do the numbers look?
I think even if you adjust that, I think it is very much in line what we were expecting. We were expecting around 660 crores, and we have taken that small adjustment of one-time income. But I think as the concentration has to be on the margin as well as on the volume growth. Volume growth is disappointing, as we have mentioned, and margin, however, I think it is around 16%, which is a bit marginally ahead what we were expecting.
Yeah, just a quick word, Sanjay. Ad spends at 12%, I believe, as a percentage of sales. Is that in line or is that lower than estimates?
It is lower than what we are expecting, but I think this is the fourth quarter, so you can actually take this number not very big negative, because most of the advertisements has been done in Q3 and many times in Q2 also. So though it is lower number, but I think not very disappointing in that sense.
Okay, Sanjay, we'll leave it at that. Thanks so much for taking the time out and being with us. Nischal is with us still. Nischal, the management is about to start speaking, so we'll have to cut across. But just a quick comment from you. Is this trend in volume growth something that you would look at, or would you look at the quarterly numbers for HUL?
No, I would actually to see. So quarterly numbers are the numbers basically which the company achieved in the last quarter. But if I want to look at the trend going forward, I would look at the volumes actually. Till the volumes turn around, I wouldn't be actually very positive on the stock.
Okay, Nischal, just stay on. The management is just about to start speaking, and we'll have to cut across to them. In fact, they have started. Let's cut across.
And Sridhar, our CFO. And can I request Sridhar to kick off with just some highlights of our results, and then we'll open it up for questions.
Right. Thanks, Harish, and good afternoon. Welcome to HUL. Before I share with you the details of our financial results for the quarter, let me just give a few words to set the operating context. As you